Hello and welcome viewers. I'm Nirmal. Let's understand what's the impact of lower bond yields right now on the commodities market. We have Kunal Shah yet again with us from Nirmal. Kunal, overall, we've been talking about what's happening with the bond market in the, developed economies right now. Number one, if you could just take us through what is the phenomenon?
Okay, a very good question because it is very important in order to understand what is happening in the broader financial
Correct.
market. The bond yields of the developed economies are falling down drastically ever since the inception of this coronavirus crisis. The global growth projections, which earlier IMF estimated, they've downward the estimates by 0.1%, but I think there's gonna be more incoming. The way central bankers have printed money in last 5 to 6 months in order to revive the growth, and in spite of that, such crisis, the coronavirus crisis is definitely going to be a big dent on the global growth. So now the problem we have at our hands is that if this crisis would lead to a sharp downward revision in global growth, then all this money printing which has taken place in last 5 6 months, that efforts
Right,
are not going to be useful.
Right. So is this actually pointing out that the worries with regards to where recession is concerned is increasing?
Yes. So interestingly, the second half of the year, if things doesn't pick up, then for example, countries like Europe, if the European GDP contracts for next 2 quarters, technically Europe will fall under a recession because it is coming up with negligible growth anyway. So I think US, Europe, all these big three, big four economies, China, Japan, these economies are showing no signs of growth in spite of massive monetary easing. So it seems that if this coronavirus crisis is not solving earlier, then we have real concerns, growth concerns coming back. So if people lose the faith on central banks that whether they'll be able to prop up the market or no, then I think it's going to be weak. And that's the reason why gold is still strategic investment at this juncture.
Right. And any major impact do we see on the commodities market in the near term on the back of this?
Yeah, on the back of this, the industrial commodities are going to remain muted till the time we see any signals by Chinese central banks or the Chinese government that they are going to put a lot of money, they are going to do a lot of fiscal stimulus. Till then, we are not going to see any rally in such industrial commodities because the growth expectations are going from bad to worse right now. So for commodity as an asset class, this is not very good news except for bullions.
Right. So overall, if you see 10-year treasury yields, they have fallen on the back of coronavirus, as Kunal has been mentioning, which is really not great, especially for the industrial metals. However, it is helping somewhere the precious metals, especially gold and silver. Thanks for watching.